Hello, everyone. Welcome to Screw the Stock Market. Today we have a special guest who will be talking to us about precious metals. What'd you think of the show, Aziz?
That was cool. It was informative. I mean, I learned a lot about gold and silver in general that I didn't know before. So I thought it was really good. It's really informative.
Yeah, Dana's really, I think, matter of fact. He's a wealth of information. He gives us some really tangible, actionable things that we can do to start his advice to kind of get some skin in the game and start learning about it by investing small amounts just to kind of get excited about it and get into it is actionable. Like anyone can afford to do that pretty much.
About to order a couple of bars right now.
Some bouillon.
Yeah.
Wait, isn't that the soup stuff?
That's also soup, but yes.
It's the same.
Because it's like a brick. So that's how it got the name.
Which one came first?
It was the gold.
The gold came first? Okay.
Yes.
Well, I don't know. Let me see. Big takeaways for me was just it's kind of resonating because I think the name of this show is Screw the Stock Market. And our big thing is we don't trust the man. We don't trust those Wall Street fat cats. We don't trust these other people. We want to encourage people to kind of take control of their finances and be, I guess, more involved, more smart, more selective about who they're investing in and who they're investing with.
Exactly.
And, that was his main thing. He's like, if there's one thing that gold is good at, he called it no counterparty risk, which is a word that I had never heard before, but it is exciting, right? It's like you buy this gold and you have it in your pocket and
nobody's taking it away from you.
Yeah. So it's exciting stuff. What else did we talk about? I don't know. I just think it's just, there's all these little takeaways. I mean, trusting in the government. He talked about the counterparty risk. He talked about inflation, which is one of the big fundamentals that, gold is there. And then we talked, go ahead.
Going with what you were mentioning before, that also ties into the risk of a digital dollar, which is where we're headed in the future. How gold is something that can protect you against the risks associated with a digital dollar in the future.
Yeah. And again, he even, he talked a little bit about trusting the government, right? If you have your money in the banking system and they just decide they don't like you, they can just freeze your money. And if you have gold in your pocket, you're liquid. And so, not that we're trying to get on the wrong side of the government or anything, like really,
or trying to be sanctioned at any point.
Yeah. But, I guess there is a valid point of just kind of that independent kind of thing. It's like, I do what I want. That's appealing. So, I'll say that I've heard some conflicting thing, and hopefully we can look up some of these actual statistics and present them to the audience. But I've heard some conflicting comments that over the last several years, maybe I think it was the last 2 decades, that gold actually hasn't been as successful of a hedge against inflation as a lot of people would have us think. But I guess without any statistics, we pretty much have to, for now, we'll listen to him and believe that. But I definitely would want us to kind of go and actually look that up and kind of see so that we can present it to our audience. Is there anything else that you want to touch on for the purposes of the introduction?
No, I think we covered a lot. I think just let folks get right into it and get all the information directly from the source.
Yeah. One last thing that occurred to me, again, is a recurring theme that's come up a lot on our show is a lot of the different asset classes that we've talked about have been pretty high buy-in investments. If you want to buy some real estate, you probably can't do it for much less than $50,000 of cash that you have, whether that's you going out and buying a single family home or investing in a syndication like what you and I do, Aziz, or even bigger, if you're going to try to invest in some crazy warehouse or something like that, you might be into the millions for your investments.
Yeah.
And one of the challenges that we've heard from a lot of our listeners is, what can I do with $5,000? What can I do with $500? And a lot of the stuff that we talk about in these alternative investments hasn't really fit that. And this might be one of the first that does. Because he said you can go out and buy some silver for $30, right? You can get into it and start getting into the game in that sense. Of course, with these precious metals, the strategy is it's more defensive than offensive. So it's not something that's going to make you wealthy, but it's something that will protect you if there is some sort of a major downturn in the economy. Right. So it's a game of chess that we're playing, and this is a defensive part of that strategy. It's interesting. So, okay. Well, without any further ado, enjoy the show. We hope you get a lot of value. And as always, thank you for tuning in, guys. Hey there, thank you so much for tuning into the show. You know, it means so much to me and Aziz that you are actually listening, that there's people really listening to the show. We're having fun with it, and we hope that you're getting a lot of value too. Education is just one of the first steps that anyone should take when they're on a journey towards financial freedom or personal development. And so it's great, you're doing the right things. I want to suggest a second step that you might want to consider if a lot of the things that we're talking about on the show are resonating with you. Consider visiting our website, legadoinvest.com/invest. And there's a button where you can click to gain access to our opportunities. And what will happen is you'll schedule a call with us. We'll talk, we'll get on a Zoom, and we'll get to know your investment experience. We'll get to know you. We'll learn about your objectives. And then if it's a good fit, we'll actually start to present you with real investment opportunities from time to time. And you'll be in the driver's seat where you can say, no, I don't like that one. And yes, I do like that one. And those real decisions, that means that you're actually in the game towards your financial freedom. So consider visiting legadoinvest.com/invest. Again, that's LEGADO invest.com/invest. Hello, everyone, and welcome to Screw the Stock Market. This is a show where we talk about investing and building our wealth and taking control of our finances and our lives and our futures, all by doing so outside of the traditional stock market and the 401k and those kinds of paths. And so today we're really excited to have on our show Dana Samuelson. And Dana is an expert in precious metals, and we're really excited. We've been wanting to talk to someone in this field for a very long time since we started the show. It's kind of the fundamentals of just kind of, we always talk about money, and I think for most of us, we think about dollar bills and bank account balances in US dollars. I think Dana's going to tell us that there's another way of looking at things, and I'm really excited about it. So, Dana, welcome to the show.
Well, thank you for having me. It's a pleasure to be with you both.
Yeah, we're very excited about today's conversation. I mean, especially with all the inflation and everything that's going on out there, I think commodities and precious metals are becoming more important than ever right now.
In an inflationary environment, tangible assets tend to do very well. And gold and silver are part of that. Real estate's another big part of that.
Yeah.
Well, great. So, normally I guess we always start with the person first. So please tell us a little bit about who you are and where you came from and how you got to where you are.
Well, I'm a 43-year precious metals industry veteran. I got my start right out of college in 1980. I graduated with a German degree, and I was completely unhireable, like almost every college graduate was in 2009. But this was on the back of the last big inflationary cycle. And my brother had gone to work for a precious metals company in Houston, Texas, that was handling a lot of volume of physical silver in particular. And the guy that was in their vault doing their counting, shipping, and weighing was overworked and overstressed, and they needed a backup for him, someone they could trust. So I was hired because I was trustworthy, and I literally started at the kitchen sink if it was a restaurant, counting, shipping, weighing, physical, gold and silver. Sterling, we melted a lot of the old sterling silver that your grandma might have back then because the silver price was so high. And then 2 years later, I got my lucky break. I got a chance to go work for the man that was most responsible for the private re-legalization of gold ownership in the United States in 1974, James U. Blanchard III. Jim knew when we went off the gold standard backing the dollar in 1971 that the dollar would lose purchasing power relative to gold. And that's exactly what happened. So he went on a 3-year crusade to get gold ownership re-legalized, and he did. And then people asked him, okay, what do we do? How do we buy it? And he said, well, I'll sell it to you. So by 1980, he had the largest mail order precious metals and coin company in the business, in the industry, in the United States. And I ended up going to work for him in 1983, being trained to appraise vintage old US gold and silver coins. And I got promoted up to the trading desk, where I got to spend about $50 million of Jim's money back then with the industry. So I got to know all the major industry players. And some of those friends of mine from back then, 2 of them are running US Mint distributors today, one in the East Coast and one on the West Coast. So I have a direct source for precious metals right from the US Mint distributors, Royal Canadian Mint distributor, Austrian Mint distributor. So these are modern bullion products that come right out of the various mints from around the world today. So I've been very fortunate. I started my own company, American Gold Exchange, in 1998. We're basically a national mail order physical precious metals and vintage coin business. And this is our 25th year. We have a very successful small business.
Yeah, congrats.
Worked very hard. I literally worked my way up the ladder, doing just about everything you could do in the industry before I felt like I could go out on my own, hang my own shingle out there, so to speak. And I was lucky because my friends helped me when I got started. They gave me more credit than I deserved. And I said to them, if I ever fail you, I'll come to work for you. And I never had to. So
how beautiful.
Yeah.
Well, there's a few things you mentioned there that are interesting. I mean, a lot of that, but things I didn't know about. So I didn't know you're saying that it was illegal to own gold as an individual person.
Yeah, that tinged my attention real quick as well.
I did not know that. Yeah.
So gold has been money and currency. Now, money and currency are two different things. Money is something that has value. Currency is something we use to exchange for goods and services. And sometimes they're the same thing. Like a barrel of oil could be considered money, but it's not a very good use of currency because it's hard. What are you going to carry a barrel of oil around in your pocket? You can't do that. So gold and silver have been currency and money since ancient times because they're scarce, they're malleable. Gold in particular is impervious to the elements. Silver can be a little bit more affected by salt water, things like that. And gold has a very great yellow, cool color about it. Right? So kings and queens and emperors and pharaohs have had their picture on gold coins going all the way back to ancient times. The U.S. Mint made gold and silver coins starting in 1793 with silver, 1795 and gold, all the way until 1933. And the great financial crisis of 1929, when the stock market crashed and the depression that followed, required that the government print more money than they were physical gold ounces to make coins out of. So Franklin Delano Roosevelt called in the gold in 1933. Between 1850 and 1933, the gold price was fixed internationally at $20.67 an ounce. Then the U.S. called in all the gold, melted it into bars that went to Fort Knox, some of them are still there. And most of the rest of the world quit having gold as currency by the beginning of World War II. Silver remained currency in the U.S. and other countries until the 60s, 70s, and late 70s when the silver price took off and eclipsed the face value of many coins. And that's when silver went out of the currency worldwide. And gold was illegal to own from 1933 to 1971. What I meant to say a moment ago was that between 1933, when Roosevelt took the gold back in at $20.67 an ounce, and 1935, that's when they revalued the gold price internationally at $35 an ounce, a 75% increase. And that's where gold stayed until the late 60s. We had $35 equaled 1 ounce of gold. Then it went to 38, then it went to 41. And that's when Nixon was forced to take us off the gold standard, because back then in the late 60s, under Lyndon Johnson and the Great Society programs, Medicare and Medicaid, and the Vietnam War, he started spending more money than we had gold to back it in Fort Knox. And governments around the world could take delivery of our debt in gold instead of dollars. And France actually sent a warship over to the New York harbor to get gold to take back to France. So as gold was going out of the U.S., Fort Knox, and our tons of gold was being depleted, that's when Nixon was forced to take us off the gold standard. And by 1971, gold was $41 an ounce. By 1980, it was $850 an ounce. Right. So for the next 30 years, 35 years, 30 years, gold traded between $300 and $500 an ounce. And then we got attacked. We went to war in Iraq, Afghanistan. We started deficit spending. Then the great financial crisis came. Gold went all the way up to $1,900 in 2011. It's been pretty much between $1,200 and $1,300 for most of the middle part of the teens, the 20 teens. And now it's back up almost to $2,000 an ounce, $1,985 an ounce today. And it's not, this is really the most important thing for your people to understand. It's not that gold's that more valuable. It's that the dollar buys that much less than it used to. Think of gold as a constant around which all other currencies revolve. And the reason it takes more and more dollars to buy an ounce of gold, today it takes $25 to buy an ounce of silver. That used to be $1 to buy an ounce of silver back in the day. It's because the currency is losing value relative to goods and services. So most people look at, gold's expensive. No, it's just the dollar's that much cheaper. And over the last 20 years, in particular, since the great financial crisis, governments have been printing money like crazy. Debt has skyrocketed. Our U.S. debt was $5 trillion in 1995. It took us 200 years to get to $5 trillion. Since then, in 28 years, we're at 31 trillion, 6 times the amount of debt that we had in the last 30 years compared to what it took us 20 or 200 years to get. So this is an example of why gold has gone up in price and why silver's gone up in price and why they actually hold their purchasing power. If you don't mind me going on for another minute or so.
Please.
No, please, go ahead.
This is a quarter minted in 1964. It's silver. The edge of it is white. Okay, the coins today we have are copper nickel. They don't have silver in them anymore. This is the last year a silver quarter was made in the U.S. In 1964, this quarter would buy you a gallon of gas. Now, in 1965, they changed the composition of the quarter. They took the silver out of the money, and we have the same exact copper nickel quarter in our pocket today. Well, that copper nickel quarter in 1965 would buy you a gallon of gas. Today, this silver quarter will buy you almost 2 gallons of gas. That copper nickel quarter that's in your pocket, well, what'll it get you? About a 10th, a 15th of a gallon of gas? That it is a real time.
If you're lucky.
In our lifetime, my lifetime, maybe not yours, but in my lifetime, of how silver holds its purchasing power over time too.
Wow. So I want to kind of re-emphasize that point that you made, that it's not that the value of gold is increasing, it's that the value. So like when you said, the price of an ounce of gold used to be X and now it's Y. Is this, Aziz and I were having this conversation the other day as we were preparing for this interview. It was that in theory, I guess we should be able to measure the value of anything against gold instead of dollars. How can someone do that in practice? That seems like a more challenging exercise mathematically to do.
There's a website actually. I forget what the name of it is. I was just looking at it the other day. How to find things priced in gold versus regular currencies over time. Going back to when gold was money, and it shows you what you could buy. Like the classic example is an ounce of gold will always buy you a nice men's suit. And today it still will. $2,000, you get a really nice suit. Now that doesn't mean you can't go down to Men's Warehouse and buy one for $500, right? Or even less. But gold just holds its purchasing power over time because they're not making more and more of it. The population keeps getting bigger and bigger. And more importantly, politicians can't go out and just dig up more gold easily like they can print money. And politicians don't have monetary discipline, just like governments have not had monetary discipline, especially since the great financial crisis, where we've seen the Fed's balance, the Federal Reserve here in the US, their balance sheet was 800 billion before the great financial crisis, and it went up to almost 3 trillion following the great financial crisis. Now it's at almost $9 trillion or $8 trillion because they printed so much more money for COVID. I mean, that's why our debt has exploded so much. Our debt increased 20% in the last 2.5 years, 20%. And that's just printing money out of thin air. So the more and more dollars they print, the less each one has value. It's dilution of value through oversupply.
Now, I know that gold and precious metals have always been kind of like the customary hedges against inflation. But I've seen and heard a lot of talk in recent times about the future eventually transitioning over to more electronic currency like cryptocurrency and things like that, especially in the face of like now, with the Fed creating their own online payment system similar to like a Cash App or Venmo and whatnot. They're predicting like in the future there might be a digital dollar. Are those types of things something that might endanger the supremacy of like gold and silver in the future? Or is it just all just a pipe dream in terms of your experience?
Well, that's two separate issues. First of all, there's what are cryptocurrencies worth, value. I mean, my friend of mine told me about Bitcoin when it was worth $20 a Bitcoin, and he told me I should buy some, and I didn't understand it, so I didn't. And it went all the way to 65,000, and it's back to about 30,000 today. It's a wild ride. It's a speculation. But what it proved is that digital currencies are something that the world can live with. And it's a way for people to get money outside of the financial system and into private hands, which is really what gold and silver are best for. It's to get some of your hard-earned wealth out of dollars, which are going to continue to lose value. Now, I do not doubt that we will have a digital dollar. In fact, we know the Fed's working on it, and they're working hard on it. It'll be like a credit card, only it'll be tied to your bank account, and it'll be instant transfer of money from one person to an entity or back. But that'll also allow the government to put money right into your bank account if we're into a stimulus situation. But what if they don't like you? What if they want to sanction you like they did with Russia when Russia invaded the Ukraine? Can they go into your account and take that money right back out? Well, that's a possibility too. It's a two-way street. So that's why people like cryptocurrencies. That's why people like precious metals. Now, the thing about gold and silver is they're kind of hard to take across borders easily. But that's really what digital currencies are pretty good at, because you can have a wallet full of money or currency and walk across a border and still have that currency in your pocket, where most countries have currency controls. But what gold and silver are really good at is getting some of your hard-earned wealth out of the financial system and into a monetary vehicle that has no counterparty risk, meaning it's recognized universally around the world, immediately liquid, and it won't lose value over time as more and more of the currency it takes to buy it becomes diluted through overprinting.
Now, you mentioned that it's a little bit more difficult to move gold across borders and things of that nature. Can you talk a little bit more about that? What are some of the restrictions and, in terms of like transferring it and mobility in terms of the asset?
Well, I'm a physical precious metals dealer. So I'm in the United States, and we only do business in the United States. Now, you can move gold and silver across borders, but you're going to have to declare it, just like you declare more than $10,000 in currency if you leave the United States on an airplane, to go to another country. They make you fill out that form. Same thing as when you enter a country. What are you bringing with you? Sometimes there's value-added tax. Sometimes there's just tax at the border over a certain amount. Sometimes there's restrictions on what you can bring in. So if you want to try and move money out of this country and into another country, you need to understand what the import and export laws are for the country you're going out of and the country you're going into. And that's all, stuff people can search on the internet. I did not want to be an import export expert, which is why my business is simply a physical mail order business here in the United States.
Very interesting. One other point that you mentioned earlier that I was really interested in is, if I think of gold coming out of like a mountain and I imagine some like golden nugget or something like that. And then at some point that's turned into a coin or a bar or even jewelry. An ounce of gold is an ounce of gold. It doesn't matter what shape it's in, right? But you mentioned something earlier. You mentioned the US Mint and the Canadian Mint. Especially now, I didn't even know. Can you tell me a little bit about what those are? What is a mint in that sense?
Sure. So when gold was re-legalized for ownership in the United States in 1974, there was really only two or three ways to buy physical gold. And that was either from refineries in Switzerland that made 1 ounce gold bars, 10 ounce gold bars, kilogram gold bars, which are 32.15 ounces, a typical European increment, or 100 ounce gold bars. The South African Mint started making 1 ounce gold Krugerrands, which is simply just a 1 ounce gold coin featuring their President Kruger on it, and their denomination is a rand. That's why it's a Kruger Rand. It's just 1 ounce of gold, because a lot of gold is mined in South Africa. It's a country where gold is prevalent in the ground. In 1979, the Royal Canadian Mint in Canada started making 1 ounce Canadian gold maple leafs. In 1982, the Chinese government started making 1 ounce gold pandas. In 1986, the US Mint started making 1 ounce gold and silver eagles. This is a silver eagle. It's just a 1 ounce silver bar that happens to be round, and it has a token of $5, it's $1 face value on it. Now, you'll never spend it as $1's worth of money because it's got an intrinsic value of $25 just for the silver content. So these are simply round bars made by sovereign governments, as opposed to 1 ounce bars or larger made by private refineries. So they take that raw gold and silver out of the ground, which isn't pure. They take the impurities out of it, and then they manufacture it into either 1 ounce bars, 10 ounce bars for gold, etc., or 1 ounce coins or bars for silver, 10 ounce bars, and 100 ounce bars for silver. That's simply how it is. And when it's made by a sovereign mint, it's the purity, the exact weight is guaranteed by the entity that produces it, which is
it's like a quality control measure.
Yeah, exactly. These things have to be right, or nobody's going to trust them, right? Including primarily the dealer community. Now, there's also the Austrian Mint, makes Austrian gold and silver coins, and so does the Perth Mint in Australia. So these are the major mints, and there's a couple refineries out of Switzerland and Japan that make other products. But we've got to pay somebody to make it first, and it's got to be perfect. It's got to be perfect for weight and purity. And then there's usually a distributor. I mentioned the U.S. distributors earlier, who are middlemen to dealers like me, and then I in turn sell to the public. So you cannot buy gold and silver at whatever you see the gold and silver printed price at in your newspaper or trading price on whatever website you follow, Bloomberg, whatever financial website you follow. There's a manufacturing charge to make it right, weigh right, have the right purity, right content. Then there's a distribution charge. Then there's a profit. So for a dealer like me, I sell gold and gold bars for anywhere from about $60, $70 over the gold price to $120 an ounce over the gold price, depending on the product and what my cost is. In silver, we do it I offer them for $2 to $4 or $5 an ounce over the silver price, depending on what increment you're talking about. A 100 ounce bar of silver is one 100 ounce unit. To make that same amount of silver in 1 ounce coins is 100 times the time and effort to make those 100 1-ounce coins. So you pay more for a 1-ounce coin than you do for a 100-ounce silver bar. It's just manufacturing costs.
So why would anyone purchase the coins as opposed to just the bar if the bar is cheaper to purchase and has the same intrinsic value?
Well, if you want to have a little money for spending, it's kind of hard to spend a 100-ounce bar. It weighs 8 pounds and it's worth, $3,000 today, right? But a 1-ounce coin is a $30 street value, right? So it depends on what you want. The mints, the sovereign mints typically make 1-ounce coins because that's, kind of fits their currency model where they make, quarters, nickels, dimes, whatever the currency is of that country. Refineries make the larger bars. It just depends on what you prefer. You have many choices. Now, we do have a modest but growing problem with Chinese counterfeits, where they're taking a metal like tungsten, which has almost the same density as gold, and plating it with gold and passing it off as a good ounce of gold or silver. They make faux silver as well, but they typically are better at counterfeiting the bars that are made by refineries because the design on them is less intricate and they can replicate it easier than they can replicate a sovereign minted 1-ounce coin that's struck by dies. They take a blank disc, it goes into a press, and then it's hit by 2 different dies that make that image go into it. So the Silver Eagle has got some characteristics built into it. I know it's really hard for your people to see, but the new gold and silver Eagles, they have one of these little denticles along the edge, the reeded edge, where one of those is missing. Now, it's not hard to make one of those go missing, but it's really hard to make them go missing all in the same spot. Right? So that's one of the things they've done to add an anti-counterfeiting design element into their sovereign minted product. So it's harder for the Chinese to replicate it. So I would advocate that your viewers and listeners, if they want to buy physical precious metals, they buy the sovereign minted mainstream items like the mints I'm talking about. The US Mint, the Canadian Mint, the Austrian Mint are the most popular here in the United States. And buy them from major dealers like myself who have a long track record in the business, right? Because if you buy on Craigslist or some of these auction platforms out there, and there's a couple big ones, you know who they are, those sites are not well policed, and the counterfeiters get in there and offer bad product. So you want to make sure you're getting what you're paying for, and a deal too good to be true is too good to be true. It's as simple as that.
Thank you so much for that. So I want to move on to a different, I guess, a related topic of just kind of how precious metals can fit into someone's overall strategy of wealth building and everything. But before that, I wanted to ask, since you brought up this idea of counterfeit, can you briefly discuss how if we are on the street and someone is saying, hey, I have a $30 silver coin and I want to exchange it for something and, actually using it as money, how would we know as regular people? Is there a simple test that we could have to know if this is real silver or if it's just a quarter, something like that?
Well, like I said, the various mints have these design elements built into them that it's really hard for the counterfeiters to replicate. The U.S. mints put some different design elements in. One of them is those notches on the edge of the coin. The Royal Canadian Mint has added a tiny little frosted maple leaf on the back. It's tiny, and it's really hard for the counterfeiters to get that right. There's really not going to be, if we go to a situation where you have to barter physical silver for goods and services, having authentic product that you've got a custody trail that you know where it came from and you can prove that, like an invoice of where you bought it from, and you have the pictures of what it's supposed to be, and then you have the real thing next to it, that'll help you negotiate. If we get into that situation, it's going to be hard for everybody. We're all going to be negotiating by the seat of our pants because we've never done that since the pioneer days. So just if you're going to buy from a reputable dealer. If you're going to sell to a reputable dealer. That's really the best way to do, and get currency if you need currency, but have some hard assets as a way to hedge against inflation, as a way to hedge against financial uncertainty, and as a way to get some of your hard-earned wealth out of the dollar, which is losing purchasing power. Now, for 4, 6, 7, 8 years, inflation was 2% a year. That's like the frog they put into a pot of water and turn the heat up on. He doesn't know that he's about to boil. But when inflation goes, because you don't really feel that inflation at 2% a year at the grocery store, at the gas pump, or in housing prices. But when it goes to 8% a year, like we had last year, suddenly you realize, hey, we're boiling now. That frog's boiling. So that's when you really feel it. And that's why gold has gone from $1,600 to almost $2,000 an ounce, and silver went from 18 to 25, because it's holding its value relative to those same dollars from 3 or 4 years ago. Now, according to the World Gold Council, and this fits with what any great or informed financial advisor will tell you, you should have 5 to 10% of your assets in gold and silver as a hedge against those things I just mentioned. It gives you enough of a counterbalance where if things go wrong, that'll offset what's going bad. And it worked perfectly during the great financial crisis between 2008 and 2012. As everything else was collapsing in price, gold more than doubled in price and silver quadrupled in price. It didn't stay that way once the economy got going again, but gold held up at a higher level. It's setting higher highs and higher lows. 5 to 10% is what most financial analysts will tell you should have. The World Gold Council says 6 to 8% is the sweet spot, where you have enough, but you don't have too much where you're denying yourself opportunity in other investment areas. And that's really what you should follow.
Okay, so that's an interesting point. So sorry, I'll just
no, go ahead.
So it's not necessarily a wealth building strategy. It's more of a defensive part of this game of chess that we're playing here.
Right.
And I that's an interesting point. So you're not taking away as much of an opportunity to maybe play some offense with some of your money to try to grow it. That's an interesting point. Thank you for that.
I mean, look what's happened on Wall Street over the last 15 years, right? I mean, you had the great mortgage-backed security debacle from 15 years ago, where they were packaging junk with A-quality stuff, and everybody bought it and got screwed, right? And look at what the Fed's done in the last 15 years. They haven't let businesses and banks that need to fail. They've taken over as the lenders of last resort. And that doesn't let businesses that should fail, which is what capitalism is all about: success and failure. Right now, we just had a big problem with banks in the U.S., with Silicon Valley Bank not managing their risk properly because interest rates went up so much, and their bond portfolio was at a big loss. Well, when they had excessive redemptions, they were forced to take those losses, which broke the bank. And what did the Fed do? They bailed everybody out, because if they didn't bail everybody out, the banking system could have collapsed as everybody in the country ran to their bank to pull their money out and put it into whatever they wanted to put it in, under the mattress, into short-term treasuries. 30-day treasuries have been a great place to put money, over the last couple of months, because they're getting a high yield and you're not in the system very long. And the government's going to back those, where they're not going to back a bank account in a regional bank that has more than $250,000 in it. So, trusting the system like I was able to do when I was a younger man is not really something most people can do these days, because the entities that are too big to fail are going to get bailed out, and you and I are going to pay the price with more and more debt and a more debased currency. That's what's happening.
Now, are there any incentives to purchasing these precious metals besides just the hedge aspect of their intrinsic value? I know some commodities like oil, for example, has some sort of tax benefits associated with it and things of that nature. Is there anything similar or anything additional that you can get by purchasing silver and gold?
No, well, as I mentioned, you get your money out of the system, you control it, but what it really has is no counterparty risk, which virtually every investment has some type of counterparty risk. If you deposit your money in the bank has that counterparty risk to give you your money back, right? If you invest in a company, in a stock, that company has to produce, and the management of that company has to perform well for the value of that stock to go up. That's counterparty risk. If you have a mortgage, the people that pay the mortgage are your counterparty risk with whoever you're borrowing the money from, right? If you're a landlord. The gold and silver don't have any counterparty risk. And like I said, it's a way to get yourself out of something, out of the financial system, out of dollars that can't be reproduced easily. Mining gold is a dirty, dirty business. And it takes about 2,000 pounds of dirt to get 1 ounce of pure gold. That's how hard it is to get gold out of the ground. Imagine if politicians had that problem in Washington, D.C., creating another billion out of thin air, rather.
Now, you touched on something I also was thinking about. You were mentioning mining gold. Is that also an opportunity for people to invest in, actually be able to invest in a mine? Is that something that's out there, or is that notoriously difficult for an individual investor to be able to get into?
No, you can buy physical precious metals. You can invest in, there are gold and silver exchange traded funds that you can invest in as well. There's a couple of good ones out of Canada under the Sprott family, SPROTT. They're very well trusted for managing their positions well. And there are companies that mine gold and silver, copper, that you can invest in. Freeport-McMoRan is one, Newmont is another. But you're betting on that company to produce. And you can get some leverage to the gold price. If it costs them $1,500 an ounce to get gold out of the ground, and the gold price is $1,750, so they're making $250 an ounce. Well, now the gold price goes to $2,000. Suddenly their profit has doubled, where their cost maybe has gone up a little bit because of inflation, or maybe energy costs have gone up, which is what has happened to some mining companies. So that you can get some leverage, but these are companies that they don't always have great management, and they don't always have high quality ore in the ground. So you really have to know a specialist to help you pick the right mining companies. But that's another way to buy gold and silver on paper, like exchange traded funds are. So you'll get less friction or a tighter buy and sell spread like you would get with a stock, which you're not going to get with physical precious metals. But again, you're going to have some counterparty risk.
Very interesting. Well, Dana, thank you so much for this. Really, I mean, it's been very informative. Lots of stuff that I didn't know. I thought I was pretty smart about this stuff, but still, just a ton of value. Do you have any last, big takeaways that you'd like to share with our audience? And then, of course, I'd invite you to share your contact information or how our audience can continue to engage with you when it comes to gold and other precious metals.
Well, gold is kind of expensive for most people today, at $2,000 an ounce or just shy of that, but silver's not. So what I would encourage you to do is to get a little skin in the game. So you have a vested interest in learning about these markets, right? So I'm friends with Robert Kiyosaki, the guy that wrote Rich Dad, Poor Dad. He's a gold bug. And I've got to know Robert over the last 5-6 years, and we're good friends. Now, he's been taking his real estate profits and putting it into gold since the 70s, when his rich dad told him, hey, get out of the dollar because it's going to devalue, just like Jim Blanchard, my mentor, learned. So you can buy silver pretty easily. You can there's coin dealers all over the country. For wherever you are, there's a reputable one that's within driving distance. You go to a local coin store and buy a little bit of silver. Get your hands on it so you understand what it is. If you want to do business with me, I'd love to have the opportunity to do so. We're a national mail order company. No order is too small. You can order online, but get some skin in the game. When Robert learned about Bitcoin, some friends of mine told me they were out to dinner with him and they were talking about Bitcoin. And he pulled out his phone and he got on it for a couple of minutes. And somebody said, "What are you doing, Robert?" He says, "Well, I want to learn about this. So I just bought one." So that's how you learn. You get some skin in the game, right? So my company is American Gold Exchange. Our website is amergold.com, Amergold. It's completely transparent with live pricing. We have a wealth of information on there so you can learn. We only have the mainstream products that I've mentioned, which is good for our clients because if we go away, whatever we've offered to you, you can sell easily anywhere else. We deal in widely traded, competitively priced, easily sellable merchandise. It's as simple as that. If you want to get in touch with us or get my market commentary that I issue about once a month, you can email us at info, at amergold.com. That's our general email address. And we'll add you to our email list. And we're not spammers. We send out maybe 2 or 3 emails a month. We're not going to be like some of those places where you get an email from them every day. We don't want you to know us quite that well because when we send you something, we want you to look at it and pay attention to it, hopefully.
Awesome.
Very cool, Dana. Thank you. That's interesting because one of the recurring themes that's come up a lot in this is a lot of the different asset classes that we've talked about, real estate or others have pretty high buy-ins, right? We're talking minimum investments of $50,000, $100,000 to get into it. And a lot of people will listen to the show and say, "Oh, that's great, but I can't even imagine saving $50,000. And this is cool. This is something that we've always struggled with is what is kind of a good middle investment that isn't a stock, but you can do with $1,000, $2,000. And you might have answered the question for us. That's really exciting.
Well, you can literally get silver for about $30 an ounce on the street right now for sovereign minted products. And, for $100, you can get 3 or 4 ounces, $120, you get 3 or 4 ounces and get to learn about it. And just
I like that.
And start stacking, as we like to say.
Very cool. Well, Dana, thank you again. Really appreciate your time and look forward to connecting with you again.
Thank you, Alex. Thank you, Aziz. It's been my pleasure to be with you guys today. Appreciate it.